Hello guys. Today we're diving deep into NIO's latest stock performance, its recent recovery after a sharp dip, and what the bigger picture tells us about where this company is heading. The past week has been full of surprises for NIO investors, from dilution concerns, sharp sell-offs, and then an incredible bounce back that left the stock closing higher than where it even started the week. If you're following NIO closely, you'll want to stick around because this is a story of resilience, investor confidence, and long-term potential. This is not financial advice. Please do your own research. On Friday, NIO wrapped up trading at $6.22, marking a gain of 2.47% for the day. At first glance, this result might surprise many, especially when you consider how the stock started the session. Right after the market opened, shares dropped aggressively, giving the impression that the day could end in the red. Investors who saw that early plunge might have assumed Friday was heading toward another negative close. Yet, the exact opposite happened. By the end of the session, buyers clearly outnumbered sellers, signaling a renewed sense of confidence and a growing belief in NIO's long-term story. What makes this turnaround fascinating is how quickly market sentiment shifted. Just earlier in the week, specifically on Wednesday, NIO shares plummeted by 9% after the company announced it would be raising $1 billion through a market share offering. Naturally, many investors were upset about the dilution this would cause. It's not unusual. Shareholders often react negatively when new shares are issued, since their piece of the pie gets smaller. But despite that initial disappointment, NIO explained how the funds would be used strategically to strengthen the company. And as the days unfolded, it became clear that investors began to recognize the longer-term value behind this move. By looking at the weekly chart, the story becomes even more encouraging. Despite that sharp midweek decline, NIO actually ended the week up 3.6%. That means Thursday and Friday brought such strong recovery that the stock not only erased the damage from Wednesday, but actually climbed above the level it started trading at on Monday. This kind of resilience is no small achievement, especially in today's competitive electric vehicle market where investor sentiment can shift rapidly. To put things in perspective, NIO's share price is already up around 36% year-to-date. That's a strong signal that the company has entered what many believe could be a new chapter. Some investors even argue that the days of NIO trading near $3 are long gone, given the solid fundamentals and upcoming product launches that are pushing the company forward. This is why many are calling it the dawn of a new era for NIO, where the focus is not just on surviving, but on achieving sustainable growth and leadership in the electric vehicle sector. Adding to the optimism is the fact that NIO is only about a week away from officially launching its updated ES8 model. Expectations are running high, with many predicting that this launch will create waves across the Chinese electric vehicle market. NIO's refreshed lineup continues to attract attention, and each new release strengthens its competitive edge against rivals. This event is being closely watched by investors who see it as another catalyst that could push the stock even higher in the coming months. It's also worth taking a step back and comparing NIO's performance to other electric vehicle players on the same day. While NIO gained 2.47% to close at $6.22, Li Auto was up 0.53% at $24.48, and XPeng added 1.41% at $20.87. On the downside, Rivian dropped 3% to $13.46, Lucid fell 3% to $19.28, and Zeekr dipped 0.85% to $29.10. Meanwhile, Tesla was the standout, soaring 7.36% to close just shy of $396. Among all these moves, NIO's performance stood out not because it had the biggest gain, but because of the dramatic reversal it managed to achieve after such a rocky start to the week. What's more impressive is how NIO turned a negative narrative into a positive one so quickly. At the start of Wednesday, many feared that dilution would undermine confidence in the stock. Yet by Friday, NIO had not only stabilized but pushed itself above its weekly starting price. This kind of rebound demonstrates not just market resilience, but also investor faith that the company's long-term fundamentals outweigh short-term challenges. It's also a reminder of a core principle in investing. Sometimes, raising capital is essential for a company to fuel growth and improve efficiency. Dilution is often unpopular, but it can also be the very tool that gives a company the resources it needs to innovate and expand. In NIO's case, the strong recovery shows that investors understand this and are willing to back the company's vision, even when short-term pain is involved. For those who panicked and sold their shares midweek, the rebound might have been a painful lesson. Watching the stock regain momentum and close stronger than before the dilution news must have left many regretting their decision. On the other hand, those who stayed patient or even added to their positions during the dip were rewarded quickly. This illustrates why long-term thinking and conviction in a company's fundamentals often pays off, especially in volatile sectors like electric vehicles. Another key point is how sentiment around NIO is shifting. More and more people are starting to see the blue sky vision the company has been promoting. Investors are realizing that while short-term fluctuations are inevitable, the bigger picture shows a company steadily positioning itself for long-term success. Between product launches, steady delivery growth, and new funding to fuel innovation, NIO is laying the groundwork for significant future gains. So to sum it all up, NIO closed at $6.22 on Friday, up 2.47%, despite a chaotic start to the session. What makes this performance truly remarkable is how it capped off a week that began with heavy selling and dilution concerns. Instead of letting that define the narrative, NIO staged a powerful recovery, ending the week higher overall. Year to date, the stock is up 36%. Showing investors that the company has strong momentum on its side. With the upcoming ES8 launch just days away and new funding secured to support its growth, NIO appears to be entering a new phase where resilience and opportunity outweigh temporary setbacks. For long-term believers, this week was a reminder not to panic at every piece of negative news. Instead, staying focused on fundamentals and upcoming catalysts can make all the difference. NIO's journey is far from over, and if anything, the events of this week show that confidence in the company is only growing stronger. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.